Hello traders, welcome to your economic calendar update for Thursday the 5th of February 2015. I have to apologise for not putting out a video yesterday due to construction next door. The audio was terrible and you just wouldn't have got any benefit from it. So I apologise for that. However, while I was away from giving you the information, the Bank of China produced an interest rate cut of 1.5% ahead of the Chinese New Year. And they've done this to boost liquidity over this period because it is a quiet time, but also because they do have a slowing economy. Their economy has been showing signs of easing and they've been a bit proactive in a interest rate cut. And the market actually liked this. They started buying the Australian dollar and the New Zealand. The reaction was totally irrational. And that's what can happen because the market's traded by traders. And as humans, we do act irrational. The theory behind it is that they've all jumped in getting excited that the interest rate cut will actually stimulate things in Australia and it will lead to better things. But it doesn't work like that, not in the short term, that's for sure. So the market has started buying up the Australian dollar, New Zealand dollar and whatnot and realised that they've been a bit irrational. So that has stalled and quite rightly so. So we're expecting the market to now get back to rational trading and price in the interest rate cut once again that happened earlier in the week. Prices are nearly back to they actually went higher for a short period. They're actually back to the price just before the interest rate cut. So there's an opportunity if you didn't actually make money from that initial large drop that we could potentially make money from it again now. So I expect the market to start selling the Australian dollar and getting back to shorting the commodity currencies again. They've been somewhat supported because we have had a bounce in oil and I can show you that chart in the technical video and talk a little bit more. But that's what's basically been happening while that's the big news. And the last all week actually, the market for the euro and other pairs have been trading off the back of the news. It hasn't been, and when I mean news, I don't mean economic data. I mean officials coming out and making statements to the press. And so that's where you can pick up on Twitter and in your newsfeed websites. And you will pick up that basically Greek officials have got a new government. They come out, they promise the world, and this is what they've been doing regarding their debt and renegotiating with the EU and the ECB. And the market bought it. So they started buying up the euros with a little bit of confidence. And now that they're starting to realise that it's not going to happen the way they said or as easily as they thought it would. So we have started to see a sell-off in the euro as expected. This isn't to say that we won't get other little boosts in the euro from the Greek situation because the market is focused on, is Greece going to be kicked out of the EU or are they going to work out a deal and keep them in? Now, under both circumstances, it's not a good thing, but keeping them in the EU is the lesser of the two evils, and the market will actually bid the euro on support of the expectations that the Greek economy being kept in will be much more beneficial than being kicked out, and we will see some short-term support. So as the story evolves, if it becomes more likely that a deal will be done, you'll start to see the euro have a little bit of support, and I expect it to be short-lived. But if we start to see the euro and the Greek officials getting further and further from a deal, we will see the euro and stocks and a lot of things get sold off quite heavily because it is a big deal. I don't think it's going to happen. Worst case, there will be a 12th hour deal as they play chicken with each other and throw a lot of threats and stalemates back and forth. But that's what's going on. So you need to understand that so that you can rationalise the price action and also pick up on if you're short the euro and all of a sudden has a bounce and there's no data and you're scratching your head, just check the Dow Jones Newswires, check your Twitter feed and other things because it's more than likely someone's come out and said something. So on that basis that the market is trading in that fashion, you need to be probably scalping at this point or have very, very wide stops and have a big long-term view and that the euro is going to continue to fall. So that's what's been going on. let's have a look at what's coming up tonight. The whole market is focused on the BOE, and we've got an interest rate decision, we've got the asset purchase facility statements, and the monetary policy statement. Now, the interest rate and the policy for purchase facility will remain the same. There's no change there. That's my call. It could be proven wrong, but I don't think that there's going to be any change. And the actual market focus on this policy statement coming out could actually be a non-event tonight. The market will actually be focused on the statement itself, and I don't expect there to be any change. There's no reason for them to have a change. We've seen some positive data coming out of the UK with PMI manufacturing and PMI construction both being better than expected. And the pound actually got a little bit of support from this, but it didn't get enough to break out from the trading range as yet. I did expect it to. I expected it to take a run up to $1.53, but it wasn't quite enough, which is interesting that we had such good news and we didn't get the pound supported, because its economy is not going too bad, as the economic data is painting quite a good picture. Nonetheless, we're still in the range bound, and what can break it out of this is tomorrow night's non-farm payroll, and I'll talk about that in a bit of detail. But later on tonight, we have some initial jobless claims, we have the non-farm productivity, we have continuing jobless claims. Now, this data will actually paint a picture of what we can expect for the non-farm payroll. So the market may have a little reaction on the back of this data coming out, because we are starting to see evidence of not quite the best non-farm payroll. Not a bad one, but not a outstanding one from the data. So if this data actually comes out weak, we could see the US dollar profit taking continue. But we'll wait and see. I'm not going to call that yet. So that's all that's coming out. The calendar doesn't have a lot of major data besides the Bank of England, but like I said, I think it's going to be a non-event. And then we'll have some data coming out which will help indicate what's going to happen on Friday. I think the best thing to do is to have a look at some technicals. So when I put out that video, please tune into that, and we'll see if we can make some money from the current economic situation that we have. So until tomorrow, trade well.